JFD, just fair and direct.
Okay, hello everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Hello again, guys. I do apologize for the slight technical issue here, and it looked like that I've lost sound. So I hope you can hear me well now, guys, and I hope you can join the session okay. So yep, like I said, as always, guys, as always, we'll have a look at some instruments here very quickly, see what they has installed for us. But again, as always, before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, guys, so I hope you're all joining in okay, but yeah, once again, apologies for the initial kind of false start. We had a bit of a technical glitch here, but hopefully everything's kind of running okay. So yeah, guys, as always, before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now let's jump into the charts. Now the first one I want to touch on here is Nikkei 225. Now look at this big spectacular move here on Nikkei, and yep, the index is pushing higher nicely. And yesterday I talked about this idea where I was telling you guys to keep a close eye on this downside line, because in a way there was a good chance we could see that one getting broken. And well, I mean, you can see that the index not only has managed to push above this the highest point of July, but also it managed to close above the highest point of June, which kind of strengthens all this kind of strengthens this bullish case here. And yep, and now we can continue pushing further north. I hope so, of course, but like I said, for now everything's kind of leaning more towards the upside. The fact that it managed to close above the June high here, which is around the 23,185 zone, then yes, of course, that created a bit more created a bit of a more bullish atmosphere, and yep, more of buyers could be joining in here potentially. So again, we'll stick to this idea for now. My next target here is around the highest point of 20th of February, or in general the high of the 20th of February, because the highest point of February is around the 23,995, whereas the high of the 20th of February is around the 23,806 zone, approximately around there. But like I said, let's aim for the high of the 20th of February first, and then yep, we'll see how all this is going to develop further. In case this suddenly starts moving back down, if by any chance the index falls back below this downside line taken from the high of the 10th of June, then well, maybe we could consider a bit of a larger correction here to the downside. So keep your eyes on that one. Shanghai Composite. So this is where the interesting bit came in yesterday. So this is what I was talking about previously, and yep, in my yesterday's morning video as well, that if we get a drop below this 3,307 zone, then yes, of course, this could increase the chances of a further move lower. You can see that this is what happened. It also it moved further below the 21-day EMA as well, and in a way everything's kind of was leaning more towards the downside. However, we didn't get that daily close below that area, and this is the result that we're having right now. The index is kind of stalling a little bit here. it's stuck in this little kind of territory between the 3,307 zone and the 3,336 level. So for now, we'll be very careful. If by any chance it manages to get back above this 3,336 zone, then yes, we will aim for the upside. We will aim for the high. We'll aim for the high of the 11th of August, which is at the same time also the current highest point of this week, which is around the 3,409 zone. And if that gets broken, then yes, of course, it opens the door back to the highest point of July near the 3,457 zone. But again, in order to consider this scenario, we need to see at least a good push and a daily close back above the 3,336 level. So keep your eyes on that one. And in terms of the downside, a drop below this area, below this 3,307 zone that I kept talking about, a drop below it and a daily close below it would do the trick, or should I say could do the trick for more sellers. So that's why for now, guys, be very careful on this one. Now jumping into the German DAX, and the German DAX is pushing nicely to the upside, so everything's working according to the plan. The index is, well, yesterday it closed in the positive territory, and it seems that it is willing to drift further north. It remained above this 12,913 territory, which is the highest point of June. So in a way, kind of increasing the chances for it to move further north. Looking at the cash index right now and where we are at the moment, we are currently fractionally above that psychological 13,000 mark. Still, we remain above that area, so that's good news. In a way, as long as it stays here above this 12,913 territory, then yep, there is a good possibility we could see this one moving to the upside again towards our main target. For now, the highest point of July near the 13,000. 314 level. So again, for now, guys, keep your eyes on this one. Like I said, yes, the cash index seems to be correcting a little bit to the downside right now, so we'll get a little bit of an open lower. Probably we'll get, yeah, it will be a lower opening here today. It will be below yesterday's close, but still above that psychological 13,000 level and this 12,913 level, so as well. So keep your eyes on those. If by any chance this starts drifting heavily to the downside, now previously I talked about this level, the 12,517 zone. This is what I was talking about yesterday, after a break of which we could aim for some lower levels. Yes, that is still correct. However, probably I'll start shifting our possible kind of breakout point to the downside here a little bit higher. So the 12,773 territory, which I've previously looked at as a good barrier for a good resistance barrier, now it could play the role of good support, which, if broken, yep, could also place the price below the 21-day EMA, and potentially some market participants could see this as a bit of a bearish indication, and then, yep, the index could open the door towards the 12,517 zone and even towards the 12,254 level. So again, for now, keep your eyes on those, guys. Keep your eyes on today's trading. It's quite interesting, but again, for now, we're leaning a little bit more to the upside. Quick update on the dollar index here. So yesterday, as you can see, it closed in the red. It failed to move above this 93.81 zone. So basically, I'm not going to spend too much time on this one. If you were following my videos, you know what I was talking about here. Basically, we needed this nice daily close above this 93.81 zone in order to kind of go for a bit of a larger correction here to the upside, but we didn't get that. And you can see now the kind of the index is drifting a little bit lower. However, it still remains within the range, so we cannot really talk about any downside. For us, the downside could come on a break here and a daily close below the 92.55 zone here, which, as you can see, acts as a fantastic area of support. So so yeah, for now, like I said, we're going to remain neutral and just continue observing these two highlighted areas. Gold. So gold yesterday pushed higher, but failed to close above this 1940 level that I kept talking about, and you can see that it kind of almost closed this doji, so which could be seen as a nice reversal signal. However, we'll remain very careful here because, yes, on one hand, we do have this upside support line taken from the low, the 20th of March, which continues to kind of provide decent support. On the other hand, we have a price which is failing to move above this 1940 zone and above this 21-day EMA as well. So if we do get that daily close above this area, then yes, we'll start aiming for some higher levels. Now, I'm not gonna probably drive this arrow all the way towards the all-time high. For now, we'll keep it short and simple, and yep, initially, and I'm gonna aim for that psychological 2000 territory, but then not even that 2034 level could come as an interest. Probably this little inside swing low here of the 7th of August, which is around the 2015 mark, so approximately around there. Let's keep it short and simple. Like I said, let's aim for that level first, but again, only if we get that nice daily close above that 1940 zone. So for now, it's trading below that, so that's why we'll remain on the cautious side. In terms of the downside, now previously I talked about this 1818 zone, but given the yesterday's low here, I'll pick up on that one. So the 1863 zone could be that breakout point for the downside here, and because at the same time it would place already the price below this upside line, and then yep, potentially more sellers could see this as a good opportunity to step in, and as this would confirm a forthcoming lower low. But until then, guys, for now we're keeping an eye on this 1940 zone. Brent oil. So Brent oil, and here again, yesterday it did show some good movement. It seemed that it wants to push higher. However, again, this 200-day EMA is providing decent resistance. At the same time, this 21-day EMA is also providing good support. Now, in a way, what it leads to a very strong squeeze that's happening right now. So basically, in a way, a good pop higher here, or a strong move lower. It could be possible if something comes out in the news that could trigger it. So that's why, guys, for now, yes, for now, guys, be very careful here, and let's see how all this is going to play out. But yeah, for now it's a little bit of a difficult one here, so so let's wait. We need that daily close above the 200-day EMA first before kind of aiming for some higher levels. And in terms of the downside, previously I talked about this 42.38 zone, but to be honest, the further it kind of moves a little bit higher here, what we could do here is maybe lift it a little bit, somewhere maybe around the 43.26 mark. This level could do the trick for more sellers, or even better, maybe this one right now. No, I do apologize, not this one right here, but this one right here, the low of the 7th of August, and that's around the 44.30 zone. And you can see that recently this area did provide decent support. So basically, maybe a drop below this 44.30 territory may open the door to its lower levels. At the same time, the price could fall below the 21-day EMA, and more sellers could be joining in here. So that's why we'll probably keep an eye on this little level right now. Now, jumping into Ripple, a quick update here. I talked about this one yesterday, and basically it's doing what I was talking about. It's drifting right now to the downside. For now, yes, it could continue moving lower here, and let me just adjust this very quickly, guys. So for now, it seems that it is kind of trading below, well, not doesn't seem, but it is trading below this downside line. But what I'm trying to kind of pick up here on is this so let me just copy this line here. So let's see if it actually is forming a nice downside channel. So, and exactly this is what's happening right now. So you can see that the crypto is in correction mode. It is drifting lower. It is within this nice falling channel formation. At the same time, this falling channel formation could be seen as a possible bullish flag, because as you can see, we had a decent rally here previously, so the prevailing trend is to the upside. Now this move lower could be seen as a correction, so probably the bears should not get their hopes up yet too much. Yes, from the very short-term perspective, there is a possibility to see maybe this one drifting a little bit to the downside here, maybe even all the way towards this upside support line, and that one's taken from the low of the 5th of July. So for now, guys, yes, we will aim for a bit of downside within this little falling channel. However, if the upper bound of the falling channel does get broken, then this may increase the chances for a push higher. For those who are more on the cautious side, you could just wait for a break above the 0.3262 level here, which is the current highest point of August, and then aim for some higher levels. So yeah, again, that's the kind of game plan right now. Let's see how all this is going to play out. Your first little obstacle on the way lower here is this 21-day EMA, which may provide a bit of support, as it did, for example, here in the around mid-July. So let's see how all this is going to play out. AUD-NZD. So I've talked about this pair yesterday, and basically I was telling you guys to keep a close eye on this 1.0880 territory, which, as you can see, got violated and we also got a daily close above it. So, and you can see the result of this, the pair is pushing a little bit higher. Of course, all this kind of creates this nice bullish atmosphere, and in a way, the next little target here could be around the 1.0994 level, and that marks the highest point of October of 2018. So, but how you could play this one safely with the fact that we already had a decent rally here to the upside, the way to play it a little bit safer is to go slowly here, step by step. So if we get a clear push above yesterday's high, which is around the 1.0921 zone, then yes, aim for some higher levels. If the pair does struggle to overcome that barrier, let's say today, then maybe a bit of a correction here to the downside could be possible, especially if the rate somehow falls back below this 1.0880 zone. So a lot to take in here, a lot to consider, but again, it might prove to be very interesting. Now, USD CHF, similar story like with the DXY here. You can see that kind of they're almost identical charts, but nevertheless here you can see that you have the pair is drifting a little bit lower. It's getting again close to this 0.9073 territory, which I talked about yesterday and the day before yesterday. So for now, the pair is in range, and the pair for now is in range roughly between the 0.9073 and the 0.9184 levels. We need to see a clear breakthrough one of these levels before kind of considering the next kind of short-term directional move, but even a small, even a break wouldn't be enough. We would need to see at least a daily candle staying above that, either above this 0.9184 level or below this 0.9073 level, because you can see that we keep getting these overshoots, but we don't get that daily close outside of this this little range. Gbp Cad, I've talked about this one yesterday, and yesterday in my morning video we were still hanging around here near this 1.7350 territory. I talked about this and I said that wait guys for this one, don't rush into it. Although it looks like a possible kind of bullish flag here, still this could continue moving lower, and what I was also saying yesterday, that this pair might form a possible falling wedge here. So at the moment we can actually consider this idea right now. So in even falling wedge, it's still considered, of course, a bullish one, bullish indication. However, until we get a break of that upper side, we cannot really talk about any upside. Because at the same time, it could continue drifting within this formation lower, and maybe then find support near this upside line taken from the low of the 1st of July, and rebound from here and then push higher. So basically, don't get be very careful, don't get stopped out anywhere here, because like I said, there is still a chance for the pair continue to drift lower up until until this upside line, and then yep, we'll take it from there. But if you want to be on the safe side, let's say at the moment, at this point in time, probably wait for a push above this downside line first, the upper side of the falling wedge, and then aim for some higher levels. And Euro Turkish Lira. Now this one is something that I picked up on previously. I haven't looked at this one for quite a while, but look at this crazy movement here. So on Tuesday, the pair was drifting lower. It seemed that it looked like it is maybe time for it to correct to the downside. However, as I've mentioned before, that for us to get a little bit more excited about a larger correction to the downside, we would wait for a drop below the 8.3015 level right here, marked by the high of the 31st of July, or in other words, the highest point of July. And then we could consider a bit of a larger slide here. You can see that the pair did drift lower on Tuesday. It failed to kind of reach this area and started reversing sharply to the upside yesterday. And today we're seeing a push above this 8.6550 territory. So I talked about this one previously, and I was saying that if we get a nice daily close above it, then this of course increases the chances for this pair to move further north. And of course the another level that we're going to be keeping an eye on is this 8.7056 actually 8.7060 level, approximately around there, which was reached last week here on Friday, and that's basically the all-time high. So now let's see if the pair can actually confirm a new all-time high for itself, and but for that we need that break here above this 8.7060 level. So we're very careful here. Not everything is going well in Turkey, so so let's see if there are going to be any measures taken in order to stabilize their own currency. But again, like I said, for now, this is the technical picture here on this pair. And finally, Euro USD. So the pair is moving back above the 1.1815. I've talked about this pair yesterday, and now the big question here is, yes, can it move all the way here towards this towards the upper side of the range here, near the 1.1909, or will it actually fail to reach that and then reverse earlier? And in this case, we could be getting ourselves a bit of a head and shoulders pattern here with a neckline around the 1.1725. So let's keep an eye on this one. For now, yes, everything's looking quite positive, but again, be very careful, guys. If the pair stalls somewhere around here, maybe somewhere near the 1.1870 mark, if, like I said, fails to reach this 1.1909, then well, be very careful. We could, like I said, see this one maybe reversing back down again. However, again, this is just an idea for now. The main target, of course, is the 1.1909, but I'm just telling you guys just to be on a safe side, just to kind of keep this possible idea in your heads. Now, guys, I hope you found it useful, and thank you very much for watching and listening. I'll have to wrap it up here, so once again, apologies for the small technical glitch in the beginning of the video. Tomorrow, just to let you know, tomorrow there won't be any Traders Espresso, so I'll pick up later on today with my Traders Tea Time, but there won't be any Traders Espresso nor Tea Time tomorrow, guys, so just to let you know. So have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.